Well, it was a sharp reversal of fortune on Wall Street today. Stocks shot higher out of the gate, the Dow rising nearly 200 points as investors cheered hiring growth in the private sector. But then, midday, selling took hold and then some, right around the time the Federal Reserve released the minutes of its latest meeting. Now, the minutes don't tend to move the markets all that often, but they did today. At the central bank's last meeting, policymakers commented on stock market valuations, with some members suggesting they're a tad frothy. They usually don't do that. They also talked extensively about reducing the Fed's multi-trillion-dollar balance sheet, something we've been telling you about and that has the power to spook the markets. With that, stocks did get spooked. They dropped hard. Major indexes turned negative, resulting in the biggest market turnaround, top to bottom, in 14 months. Here's how the day ended. The Dow Jones Industrials lost 41 to 20,648. NASDAQ down 34. The S&P 500 lost 7. Bob Pisani has more on today's dramatic move.
Stocks rose early in the morning as oil rose, bond yields moved up, and the ADP private employment report was strong. Then midday, the markets reversed. The initial catalysts were in the Fed's minutes from its last meeting. Now, the Fed made several comments that could be interpreted as negative for stocks. First, they don't expect fiscal stimulus until 2018. Second, some in the Fed see the stock market valuations right now as high. And finally, they're considering reducing their $4.5 trillion balance sheet this year. And that's likely viewed effectively as an additional tax hike. Now, none of this was helpful for the stock market. And then, shortly after the Fed minutes, House Speaker Paul Ryan was quoted in a Reuters story saying tax reform could take longer than the health care overhaul. All right, what does all this mean? Well, the market cares about three things right now. First, it cares about the Trump agenda. Second, it cares about interest rates. And third, growth and the right valuation for the stock market. All three of these ideas got smacked around this afternoon. And you can see these issues got the markets going by looking at volumes. And the volumes have been terrible for the last 3 weeks. Not today. Big, broad, exchange-traded funds, ETFs, had very heavy volumes. So, for example, the Russell 2000, 30% above normal volume. The NASDAQ 100, 60% above normal. And the S&P 500 ETF, the SPY, about 25% above normal volume. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.